Ghana's emergence as one of Africa's most dynamic emerging markets has been rapid. Think about it. Ghana has one of the best enabling environments for private participation in
Over the years, Ghana has made great strides in the economy with youth entrepreneurship and technological innovation. The push for digitization of the economy is also in keeping pace with the rest of the world. However,
to speak to us is the managing principal in Jaro Investments Limited, Jerry Parks. A round of applause for him as he takes us through equity and impact capital investment sector strategy and priorities investor perspectives.
Thank you. Good afternoon, everyone. I feel very fortunate to have drawn the short straw to have to address people after their separation from lunch. Today I'll be talking about the investment sector perspective on the African continental free trade area and how we can build deal flow and deal values from the perspective of Ghanaians trying to gain a foothold in the market. So I'll just take a moment to find my notes. Well, as you may already know, the African continental free trade area is a huge opportunity for all African countries, but as Ghanaians or as Ghanaian businesses, we should be making it our aim to capture a lion's share of this market. I believe the market size estimated is over $2 trillion US, which when you compare to our 2021 GDP of around $76 billion, means that we have the opportunity here to target a market that is almost 50 times our own market. The opportunities for Ghanaian businesses come in probably two forms. One would be to sell your goods and services, basically export your goods and services to other African countries. But the other one, if you're a bit more ambitious, would be to actually expand your own business to become a local operator in these countries. From the investment side of things, i.e. those fund managers like myself who are investing capital, the major opportunity would come from being able to invest outside the shores of Ghana so we can create more diversified and stronger returns. So the big question is, how do we make this happen? So let's start first on the side of Ghanaian businesses. What can we do? What can Ghanaian businesses do, or what can be done for Ghanaian businesses to make them better at accessing these opportunities? So I'm going to touch on what has been mentioned probably 3 or 4 times before. One of the big things that we need is investable Ghanaian businesses, right? Within the context of the AFCTA, if an investor wants to support a business to capture that opportunity, then that business needs to demonstrate that it is prepared, it is ready to capture the opportunities offered by this large free trade area, right? So I'll try to share a few specific thoughts on what companies can do to prepare. The first one is what I call travel and see. And I'm saying this because ultimately all business happens between human beings. Ultimately, every business that you've ever done happens between human beings. Partnerships are between one person and another person. So similarly, if we're going to go and do business in Cote d'Ivoire, Mali, Kenya, South Africa, we really need to get out there and meet potential clients, potential partners, or maybe even potential investors that come from these other places. So how do we make this happen? I think we need to be, as a country, we need to be proactive about organizing more conferences, trade-related conferences, ideally happening here in Ghana so we can bring people to us and give our Ghanaian companies an opportunity to meet people. Similarly, Ghanaian businesses should be more proactive about going out to international conferences. Don't be worried about the language. Most of these conferences, they have interpreters who will also speak to you in English. And most of these other countries have accomplished business people can speak in English. So get out there, travel and see. The second thing I would mention is do your market research. The success of every business really depends on what you can sell and how much of it you can sell to your target clients. I believe the first phase of the AFCTA implementation touches on, I think it's goods, services, and I think the third one is conflict resolution or something like that. But the first phase really focuses on goods and services. So if you're a producer here in Ghana and you want to sell to another country, you really need to go out there and do a proper market study, pay an advisor, pay a consultant to actually do a proper market study to let you understand what the strengths and weaknesses of your product are vis-a-vis the market you are trying to enter into, right? So you're making something like Alomo bitters, which people in Ghana have a certain preference, and therefore you've blended it in a certain way here in Ghana. Go out to the other countries, test a few different blends, and establish what new variants you might need to attack the Lagos market or the Kaduna market or something like that. So, this market research, if done properly, should help us identify gaps, because no company, no matter how good you are in your home country, will also be a superstar in every other country. So do the market research, find out the information, identify gaps in your current setup, and then figure out the costs of filling those gaps. Now, when all this has been done, then you have the basis for costing, or figuring out how much it will cost to plug all those gaps and to access the market. I think one very important point to add, especially in the movements of goods, is just how much time and effort and cost is involved in moving products across our land borders. So yes, AFCTA has been implemented since January 2021, but in reality, when you're trying to move a product across the border, there are these additional costs that you may not have factored in. So all this needs to go into your analysis so that when you're costing the opportunity, you can do this accurately before you go to the stage that most businesses like to go to, which is the raising of finance. Now, if a company that has done all these things that I've mentioned, and one that also has a good track record locally, 2 or 3 years of profitable track record, has a very, very good chance of being able to raise finance and thus to also enter into the target market. So this focuses on what the companies can do for themselves. But putting on my Ghana hat, I have to ask them what else? So our government has already been quite proactive, getting the HQ of the AFCTA here in Accra, which means that we already have a bit of a gravitational pull where we can make sure that a lot of the support services that may be given to businesses can also be domiciled here. So let's not stop at having the HQ over here. Let's be proactive about setting up special incubators, accelerators, getting support from GIPC to really help Ghanaian businesses to successfully enter into other or non-Ghanaian African markets. From the perspective of us, the PE funds, we will always welcome being able to work with companies that have benefited from some pre-investment technical assistance as well to strengthen their capacity and strengthen their business case before we make an investment in them. So this is an open call to the government that, yes, I echo for getting the HQ over here, but what else can we do to really make sure that support services around helping businesses to implement AFCTA or benefit from the opportunity can also be located here in a way that benefits Ghanaians a little unfairly, and we'll say that unashamedly. So at the top of my intervention, I mentioned that there are two ways that we can look at getting improved deal flow and values and success. So the first one is getting investable Ghanaian businesses. The second piece has to do with mobilizing or aggregating capital to capture the AFCTA opportunity. When we look at our current economic situation, it is clear that the importance of diversification becomes very clear. I think probably that's the best way to put it. Wouldn't you all be happier if you knew that your pension funds were at least 30% in maybe the CFA zone where inflation is low, returns are still decent, and the currency is pegged to the euro, right? So as a country, another way we can benefit from this opportunity is to ensure that our asset management sector, our financial sector, is being positioned to fully capture the diversification and return benefits of this opportunity. So we need to start with things like government policy. Right now, the National Pension Regulatory Authority guidelines only permit a small percentage of capital to be invested outside of Ghana. This might have been linked to a home bias where we feel that everything in Ghana, we want to build our own economy, but we also need to look at the other fiduciary duty of a pension fund, which is to ensure that pensioners, when they retire, are getting a reliable source of income that is inflation protected. So we need to look at some of our policies so that we can allow Ghanaian asset managers to invest more outside of Ghana so that they can actually go out there and invest in non-Ghanaian, lucrative non-Ghanaian opportunities and bring their returns back home to Ghana. So that's what we expect the government to do. But we as financial sector actors ourselves also have to be bold. In the same way that we're asking businesses to travel and see, go out there, find new partners, find new opportunities, we also need to move to the phase where a Ghanaian bank is going to set up a subsidiary in Nigeria or in Kenya or in another country. We can't leave the entire market to South Africa and to Nigeria, right? And we have to think about the additional benefit of having this sort of expansion of our financial sector actors. Just think about Chinese banks and Chinese construction firms and how these two work in tandem to win projects all across the African continent. So by strengthening our financial, having more investable businesses, there's also work to be done, however, on the capital aggregation side and also on the improvement of policies to free up the capital to go and chase these new opportunities. And I've highlighted a few of the points which I hope we can discuss as we move to the panel. So thank you all for listening.
Managing Director, ladies and gentlemen, Managing Principal in Jaro Investments Limited, Mr. Jerry Parks, taking us through the reason that you need to do your market research very well so that you can strategize, and also you need to move out of your comfort zone so that you can test other markets and invest in other markets. And you bring the returns to your country, and that way it also goes a long way to expand our economy and how much we want the world to see us as a nation. All right, so ladies and gentlemen, we're going to move on to the next presentation, and I'd like to respectfully call on the MD of Eden Tree, Catherine Krobo-Edusei, and she's going to take us through preparing and pitching the investment deal, challenges and successes, business perspectives. A round of applause for her.
Good afternoon, ladies and gentlemen. Kindly accept my humble greetings to all present in the room. My name is Catherine Krobo-Edusei, and I'm the Managing Director of Eden Tree Limited. And I happen to be an example because INP invested in Eden Tree. So having experienced it, what better than to actually talk about the pitch for investment. Eden Tree is 25 years old, and when INP invested in Eden Tree was 18 years at that time. So Eden Tree had history. So sometimes the investors actually need companies who have existed and have some history before they are able to invest. The topic is pitching the investment deal. So the pitch basically is that you come up with a good, convincing story. It's a story to be told. However, my advice is that the story must be true. It must not be a lie. when it is time to do due diligence in your company, the story must be the same. So there are a few points that I would like to point out, which will be a summary of your story. 1, how much do you need? That's the first thing. The investor needs to have an idea what you're looking for. Describe your business. What problem is your product or service solving for the end user? How will your business make money? What will the impact be to the community or society? Example, creating jobs or improving life for those at the bottom of the pyramid, etc. They need a good story. Technology is currently trending. Therefore, if you can infuse it into your operations, this will be helpful. How will your business grow? You must know who your competitors are. You must practice your story by pitching to professional friends and family. Get help from a business consult by negotiating a good rate for that fantastic story. Be clear on equity. How much shares are you prepared to part with for the funds that you need? So this is the summary of what your good story should be, the pitch. Now, after the pitch, the next stage, if the investor develops an interest, the next will be due diligence, which is why your story must be true. And then after that, getting yourself ready. I'll talk about 4 points. That is a detailed business plan covering a minimum period of 5 years. 2, regulatory. You don't have farms. We have small scale. We need capital. Not the small capitals, commercial farms takes a lot. Maybe 4 investors can come together and take a share. This is how we're going to move. Otherwise, we are not. We are just going to be going round in circles. And eventually, maybe companies like us, Eden Tree, in the future, you will hear, oh, Eden Tree has closed. It's not surprising. And the new ones that are coming up, how will they survive? How can they survive? We need to correct certain things. Thank you.
Ladies and gentlemen, we need to correct certain things. And that happens to be the second and very powerful statement that she has made. The first one is your story has to be. I want to hear from you, ladies and gentlemen. Your story has to be. Thank you very much, Madam Catherine Krobo Eduse, MD of Eden Tree. Thank you very much. We're going to go into a panel discussion, and I'd like to call on my panelists to join me on stage. Mr. Jerry Parks, Managing Principal in Gyro Investments Limited. Catherine Krobo Eduse, MD Eden Tree. Sanda de Klerk, Founder and Chief Rolling Officer, Good Roll Africa. And then Bridget Asante, Deal Associate Zebu Investment Partners. Please, if you're here, quickly join us on stage. And to moderate this section, I'd like to call on Mr. Yao Brimpong. Mr. Yao Brimpon, please, if you're in the house. Okay, if he's not here, let me quickly call on Mr. Kwame Jantoa, please. Can you do this for me? A round of applause for him. Please this way, please this way. I know you're good for this one, so I got you.
I'm not prepared.
I know you are prepared. Please, the microphone.
Thank you. Please forgive me if I'm not really prepared for this, but I will try my best. Please, I don't know your name. I only know Catherine, but I don't know the others, so forgive me. The man from the bank. Jerry Parks. Jerry, are we ready? Is Ghana ready? You said we should go out there and do partnerships and see what is there. Are we ready? And I want you to be very honest with us. Are we ready for AFCTFA? Do you think Ghana as a business entity, we can do it? Are we ready?
Oh, you actually asked two questions there. Are we ready or can we do it? So the answer to the first one is we're not ready, but the answer to the second is yes, we can do it. And like I mentioned earlier, it really is all about being focused on the outcome that we are looking for. So we need to remember that first, before you even venture into a different market, you need to make sure that you are quite strong in your own market. So our very first task is to make sure that we're building a strong foundation here within our local market. Some people might try to accelerate that process a little bit through partnerships, and it's probably worth pausing and talking a bit about partnerships, because one thing I've found in talking to many entrepreneurs over the last 12 years of investing in West Africa is that too many of us like to go alone. Whereas if you had partnered with someone else, you'd have been able to move faster, and you'd have been able to go farther as well, which is a bit of a paradox, because Africans have a parable that says if you want to go fast, go alone, but if you want to go far, go in a group or go together. So yes, I think we can do it if we build strong businesses in the first instance, but also look at partnering with strong businesses outside of our home country to help accelerate the process.
Sorry, sir, what's your name? And what do you do?
I make toilet paper from bamboo, locally in Ghana.
Toilet paper from bamboo?
Yes, together with farmers. So we got toilet paper farmers.
Are you partnering any Ghanaian company or any Ghanaian business?
Yes, so we work with Bangara. They invested a small funding in us.
Why do you think your partnership with this company is working?
It's working, but it was really, it takes 9 months to do the whole funding, and it was really a small amount. So we maybe introduced, we're a European company, so we already have like 10 million revenue in European company. And it was really difficult to even find the impact companies in Ghana. So I emailed them, I called them, nobody picked up. And then I told our local CEO, let's go to all the impact funds and talk to them. And then I met Injaro, I met all the other ones. But it was really difficult even to find them. And now the factory is done, we're producing. Now we want to get to the next stage. And it's really difficult to get funding. So we, in European, we stopped with banks and impact funding. We only do crowdfunding. We just are now doing a campaign where we released about 700,000 euros within 2 weeks.
You see, we talk about funding being an issue. there's a lot of money out there that is chasing business.
Yeah, but because we have a profitable business already.
Just a minute. There's a lot of money out there chasing business. Do you think the mindset of the Ghanaian business person stops us from getting that money, or do you think we have a mindset that is like a European business?
I think also in European it's difficult to get money. So it's not. I think it's like we're in a different. If you see like the tech sector,
allow anyone to take an equity stake in their business. There are so many reasons for this, not all of which I think are valid, but this is just a feature that we see. The second thing that we see is a tendency to significantly overvalue their business when you start engaging in discussions with them. So the moment you show any interest in investing in a Ghanaian business, you could have been having a discussion 2 weeks ago where you said the company, we think the company is valued around 2 million. As you get closer to doing the deal, they tell you, oh, my business is worth even $10 million. I've had an entrepreneur say to me that just the knowledge in his head alone is worth $1 million. These are actual words I'm quoting from a negotiation with an entrepreneur. To which I said, well, convert that knowledge in your head to $1 million and put it in your business. So there's that. And then the third one is the treatment of the business like it's a personal bank account. So this might be linked to the first reason that I mentioned, where they don't want to give up equity in general, but it's mainly because they don't want to give up control of the purse strings. The ability to go to a funeral and write a funeral contribution in the name of the company without anybody asking you any questions. This might be tied to the fact that culturally in Ghana, we tend to link the company name to the individual. If you set up a company called, I shan't use real company names, if you set up a company called ABC, your name will change from Jerry to, oh, Mr. ABC. That's the ABC guy. And I don't know whether psychologically that creates an emotional link to the business that makes it impossible for us to treat the business as a separate entity. So these are just three of the elements that we've seen that make it, that increase the friction in terms of getting capital deployed into some decent businesses. And the last thing I'll say is that if the company happens to be profitable or not in crisis, then that discussion is going to take even longer because the value is going to go higher and higher. But I think with this, I'd really like to hear what Catherine has to say about that.
Catherine, hold on and let me come to, because yours is a different kettle of fish. So, Madam, please tell us your name and tell us what you do.
Okay, my name is Bridget Asante. I work with Zebu Investment Partners. Zebu is a private equity fund manager. We invest in agribusinesses and food businesses. So any business that has direct impact on food security. It could be an import distribution business, it could be food processing, it could be crop production, it could be agri-tech. Any business that's along the food value chain, Zebu invests in businesses like that.
So at what stage of this food value chain would you invest in?
Because we are private equity, we look at businesses that have a track record. So you've been operating for at least 3 years. You have financials to back your operations. You've proven your business model and you've validated your business concept, right? And we also, it depends on the ticket sizes, right? And we don't just look at businesses in Ghana only, we invest across the continent. So depending on if your business meets our funding criteria, we are happy to take a look at it.
Isn't that a major problem for us? Isn't that a major problem for Ghanaian in terms of catapulting Ghanaian business? Because I'll give you an example. When you go to the Bui area, where the Bui Dam is, they grow masses of cashew. Masses of cashew. Currently, they don't have warehousing. Currently, they are contract farmers. You know the kinds of money you can make out of cashew. If they came to you, they don't have 3-year records. They don't have some of the things you're looking for. Would you invest in them? But they have the potential to do something big. Would you invest in them?
Okay, I think in the previous panel, one of the panelists had touched on the fact that you're investing other people's money. And in investing other people's money, you have a mandate, you have an agreement. There was a particular story you sold to them for them to back your fund. They are backing your fund off the story that you presented, that you would be helping businesses to expand. Likewise, though we have that mandate to focus on growth businesses, there are other funds that focus on venture capital investments, making angel investments, impact investments. So there are different sectors of financiers depending on which growth stage you find yourself. There's a market for everyone. That is why I think some of the other speakers had touched on it, that you need to do your background research and approach the people that meet your financing need, right? If you're a startup and you come to a typical private equity like us, the likelihood of us saying, let's speak again in 3 years when you've proven your concept is high. But then if you've approached a venture capitalist, the likelihood of them getting ready to start a funding discussion is high.
Catherine, you have been in this business for a long time. I've known you for over 20 years. How did you start? Because I heard you put down a few points, but those points were, the way I saw it, was for a company that was kind of semi-established. What about those who want to grow your carrots and they don't have the wherewithal to go to some of these companies? How are you able to make sure that they are able to grow the carrots and grow it at a price that will be beneficial for you? Taking that you're already established company who needs their product.
Yeah, I think it will be difficult for them to get funding from an investor, but maybe another way around would be to probably link them up with an established company, so that through the established company, because the company needs the raw materials, can then assist the farmers to do the work.
Have you tried doing that?
I have, but it is difficult. And
tell us some of the difficulties.
Okay, the mindset of some of the farmers, okay? Sometimes we have programs where we are thinking, or maybe not us, or maybe the West, okay? They are thinking, oh, there's the low-income farmers at the bottom of the pyramid, they need to be assisted. So their programs are kind of geared towards that. However, you start working with this smallholder farmer, and he is not really interested in progressing. He has his days that he has to go to his funeral. You know, he has his days that he has to sleep all day. You know, he has his days that he will work, and it's set. And it carries on from farmer, one generation to the next, to the next. They don't understand all-year farming, you know. So those are the difficulties that I faced when I tried to do that.
These two banks here, or this investor in this bank is saying, okay, that's a good reason why we should invest in agriculture. But with this kind of problem, how will we do it? Does it take government policy? What is government's role in making sure that this happens? What is companies like AGI, Chamber of Commerce, what is their role? Businesses, what is their role? If we really want to make sure that the agriculture that you're talking about comes to fruition.
For me, it's a complete change of mindsets and education. If you want this to progress. That's why I'm also talking about commercial farms as well. You know, that can go alongside. And with the commercial farms can employ the smallholder farmers. And that one, it's a contract. You work, if you're not ready to work and you have to be going to funerals, then you can't do the job, you're gone. So that's the difference. But however, when you are working with a smallholder farmer and you've contacted them, if they are not prepared to change their mindsets, the land belongs to them. Okay, so if they decide to progress and plant what you need, fine. If they don't, you've lost. That's why I am really pushing for commercial farms.
What was your name again? Sorry? Sonden. Sonda. What do you see as a European, right? What do you see as the major hurdle for Ghanaian businesses to enter the AFCTFA?
What's the AFCTFA?
The African Continental Free Trade Area. I'm sure with your toilet rolls, you'd be entering the AFCTFA.
Yes, for sure.
Yes. So what do you see as a major challenge for Ghanaian businesses getting into the AFCTFA? Is it funding? Is it mindset? Is it lack of capacity?
I think
is
it's
it capability?
A little bit of all. Like mindset is. I think it's changing because we only work with Ghanaian, so we have no European guys. So I'm here once in a time, but we only work with Ghanaian. So I think there's a lot of knowledge and a lot of good people working in Ghana. So what I experienced. So that's number one. So people, the mindset is changing, but still it's different like European. So I always run, and here they say always, yeah, it's coming, it's coming. It's always like, so it's like, it's a mindset of the European has to change if you want to work with African people. It's like you have to peace, what they always say to me. So that's one thing. Funding, it's really difficult. So we always talk with banks. We have a small impact funding in our company. But with banks, the interest is so high. So you only work for the banks. I don't know if there are banks here, but in my opinion, it's if a Ghanaian company borrows money from the banks with this interest, you only work for the bank, in my opinion. So that one is that. That's why we're always looking for other ways to get funding, and that's why we really believe like in crowdfunding or like impact funding, who is really like in the impact, because if you otherwise you cannot grow really the business. And I think the ministry, so we're working really good with the GIPC, Ministry of Trade, together with us. But also that takes a lot of time. So they promised us the road, to do the road for us. And it's now 9 months. And every time they say, yeah, it's coming. But there's raining season, so 3 weeks ago, we had to close because the whole road was blocked. And that's all these things are. If I talk in the European to our board, they don't understand how it works. So sometimes I take them and to explain them how things work and show them how it works. And I think to work with Ghanaian is one of the best things because they're lovely people. But you have to take some time to understand how the system works. So for me, like I'm here now for 3 years, so now I know a little bit how the system works. And sometimes for days to talk to them to see. Just go to the office and see how it works. And that's
everybody faces. But it's the mindset. What's the European mindset that we can learn from?
I think
that is different from the mindset that you're seeing, having to go and sit in somebody's office all day. What's that mindset that we don't have?
Just like the ambitions. Like we have the vision I have a vision like with our companies that's like, okay, we want to be next more. So it's really they can make a product locally in Ghana made from their resources. And a lot of people, the farmers, they're always laughing when you show them the tea roll of bamboo. They didn't believe that this was made from bamboo.
But you can make matchsticks and toothpicks from bamboo also. It has various uses.
Bamboo is the one thing with my CEO the whole day, call this guy, because tonight I want to work the whole night to finish it. And I think it's not fixed yet. So that's how later. And so that one is really stressing me. And I think the whole transportation in this company, the roads are really bad. So we're at Akomufia, Akonsombo, so we're really happy with the train rails.
What's your name again?
Sander.
Sander, when he talks, we can really get into AFCTFA and do wonderful business. But the attitude and culture doesn't help. Mr. Parks, you indicated that we should go out there and find out what is going on there, get some businesses to partner with out there, when even in Ghana, we can't even do bank syndication, which is a challenge.
Yeah.
So how do you expect even the banks here to syndicate before they go out there? How do you expect that to happen?
I mean, this
Because the
isn't...
banks here don't talk to themselves.
So I wouldn't claim to be an expert on the banking sector, but I think when there are really lucrative...
Even finance houses.
Oh, I think when there are really lucrative deals like cocoa financing, they work together, right?
I'm not talking about lucrative deals.
So,
those are big.
But it really comes down to how lucrative the underlying business is and the size of the opportunity.
Is it only lucrativeness that you look at? As a finance
as an investor,
house?
we also look at the impact, but the financial sustainability has to come first. So let's say I'm investing in a company like Saunders Business, which makes toilet roll out of bamboo. If I invest in a business which collapses after 1 year due to lack of profits, then the impact is not sustained. So one of the things I have to look at is, can this company continue to generate enough cash to cover its costs and pay for the capital that has been invested in that business? If that condition is not met, then all aspirational thoughts of impact go down the drain as well. So people may accuse us of being sharks or whatever, but at the end of the day, you need money to pay for everything, especially social impact.
So let's move from the bamboo to Catherine the carrot.
Yeah.
Would you, listening to her, and she telling you that carrots being grown here are much higher in price than carrots being imported, would you invest in her?
I think we could find a way of investing in her. So, and I think this is a very good question, because this might hopefully illustrate to other businesses how you can structure things. Catherine's business, and I'm going to make some assumptions over here, has been running for more than 10 years. The second assumption I'm going to make is that Catherine's current business is profitable. She has one product that she's got customers for. People want to buy the carrots, but it so happens that the input cost, the cost of the carrots currently is very high. Now, if we agreed that we could make an equity investment in her business, with the proceeds of that investment purposed for the development of a carrot cultivation program, not necessarily using smallholder farmers, but using the best solution that gets us to less than 15 cedis a kilo, because that's a target. I remember she mentioned it. So we have to have a plan that is going to get us a yield, which will give us a unit cost of, say, 7 cedis a kilo at cost, so when we are selling, we can make a profit. This is the kind of thing that we could look at. We'd have to go and speak to some agricultural experts to find out whether 7 cedis a kilo is possible anywhere in the world. They'll tell us it's possible, say, in the Netherlands, very likely. And then we go pick up some consultants from there, ask them how they can adapt their methods to Ghana. Let them advise us on how long it will take us to actually develop a research program, because this is not going to happen overnight. You're going to have to cultivate maybe 4 or 5 different cycles before you get to a point where this is lucrative. So if we could get to an arrangement with a company, we could invest in Eden Tree so that it can have a subsidiary that does the production of carrots, with the understanding that it would reduce her costs and enable her to also supply her competitors.
Mr. Santi, would you do what he's saying, or you approach it differently?
Yeah, I think what he's saying is something that we'll do. As part of our investments, we usually have a facility called the Technical Assistance Facility that supports businesses with feasibility studies, with technical support, and it's being implemented by TechnoServe. And let me give an example. We had a poultry operation that usually buys maize as feed inputs for its poultry, right? We realized that during harvesting season, prices like this, post-harvesting, price shoots up. What can you do to manage? You need to stock up on maize. Beyond stocking up, the quality of maize that you feed your poultry has a direct impact on their laying capacity and their production. So the Technical Assistance Facility supported an outgrower scheme where there's a network of outgrowers. It's not just one smallholder they've come together, there's a cooperative, there's a body you can hold responsible if the yields don't come through. Training was provided to the farmers, they were given improved seeds, so their yield is doubling, they are producing more. They have direct offtake from their business, so they have ready market access. Their market problem is being solved, and you have a pre-agreed price at which you are buying. So you are able to factor that into your cost of production.
So everything goes through the value chain, yes? Okay.
Yes.
Now, I have about 3 minutes, and I think it's good to be interactive if you can. 2 minutes. I'll take 1 or 2 questions. Anybody? Anybody?
Just 2 questions, please. Should I come to you? All right.
So,
Introduce yourself and what you do.
my name is Amy Beth Quanton. I run a coffee company, made in Ghana coffee, called Karamoka. So we're also involved in agribusiness, and we work on the entirety of the value chain. So we work directly with farmers in Lake Lebi in the Volta region, and then we have a processing facility as well.
Quickly, your question.
My question
And
is...
it's to who? To
I
which of
can't
the
pronounce
panelists?
your name, I'm sorry, but I think the company is called Goodwill, is it? Oh, Sander, okay. I don't know if it's an offline question, but I'm curious about the structure and the business model, because I think for a lot of us, getting that business model right to even make it attractive to be investable is a problem. So could you tell us a bit more? Because you mentioned a parent company that seems to be well-funded and already making revenue. And just to piggyback on that question, the second question is to Jerry Parks. Is there anything you can do for companies? My company has been in existence for 7 years, and becoming investable is still an issue. Is there anything that can be done to support, outside of, donor-funded programs that, you have to go through a 6-month accelerator, all of that? Are there any practical things that can be done to speed up investability of companies? For example, you talked about partnerships. Is there any support that can be given before they come to you so that, there's already a partner that you could tick that box? It's not solo anymore. They've, already potentially found the market and increased their revenues such that companies become investable faster and can scale up.
Okay, please keep your questions very short.
I think for the business structure we have to talk later because it's too big. For the other question you're asking, because maybe I didn't tell you, but I like to spend a lot of money. So all my companies, the first years making a lot of loss, because I believe that, and that's why I want to tell us that we all talk about when it's profitable or when you make profit, you can invest, or the investor is there. In my opinion, it should be different. Investors should invest more in companies who make a lot of loss. But if you make a lot of loss, or make a lot of investment of if you want to grow, you have to spend money. And that's why the burn rate, I like burn rate, because how high the burn rate, how more we grow, in my opinion. And it's all about growing, and that's what I see. Like also the lady, I think she's doing a good business, but still, if you want to grow and you make still a loss, then the extra money gives you the push to really grow. And I think that one is like, in the African banks and everybody, all the investments, they all think, okay, you have to be profitable before the investment, but I think you have to be before the stage, because the investment comes with the money, you can be profitable.
So the second question, you come straight to him. Mr. Parks.
Yeah, thank you. And I think it's worth piggybacking on what Onda said as well, that a lot of the challenge we have in terms of the types of investments we can make is driven by our sources of capital as well. I think Ebenezer mentioned this. Bridget has mentioned this as well. And our sources of capital. So we actually have clauses in our agreements that say you cannot invest more than a certain amount in a startup. Or in some cases, do not invest in startups. So that means that we have a challenge. And I thought it's worth mentioning this because if we really want to fix this problem at a systemic level, we need to aggregate more pools of capital that permit investments in startups. So I know DBG is here. In the planning for the private equity sector, I would appeal to them to have a carve-out for investments in early stage businesses. When you're investing in us, give us some amount of money and say, look, you can put this 20% into startups or early stage businesses. Because that's the only way we will be able to help early stage businesses. And to the lady who was asking about partnerships, I would regretfully have to flip it back to you as an entrepreneur, that you should think about how you find a partner that gives you credibility in the marketplace, right? So I know as an entrepreneur, everyone's dream is to start a new brand, create something that is their own. But one other thing you could also do is to go to an established brand and say, hey, I don't know the international coffee brands, I'm not really big on coffee, but you go to a big brand and say, look, I've got this concept, I can help you develop an Africa-sourced, fully traceable, fully organic coffee brand. I think you'll need something like, I don't know, $2 million to make it happen. And let me go and execute it for you. And when the business grows, I only want a 10% equity stake, right? I'm not saying that will definitely work, but that can start a conversation. Even if you end up with 1% equity stake, which is more important for you, getting the business started so that you can create a personal track record of developing a business from scratch with a reputable partner. You do that on the first one for brand number one, and now you've got a track record. I worked with, I don't know, this big brand to launch this sub-brand here in Africa. We got all this work done in 5 years. Now I've got a new startup which I want to do on my own, but look at the track record I built with these other guys. That is a very, very different story from trying to hustle and push a new brand from zero, trying to use third-party capital. And I'm not saying this facetiously. I also see myself as a small businessman. When I was starting out, I didn't have track record in the business I was doing. What did I do? I went to go and look for people who had more experience and beg them to be involved in my business. You have to give up some things in order to gain some things, but that's what I did. So I think as entrepreneurs, it goes back to this partnership thing and this inexplicable need to go it alone and prove that we are Superman or Superwoman. Well, let's try to find easier ways of partnering so we can move ahead faster. Life is short.
Do I have a last question? Okay.
Okay, thank you. My name is Maureen Erekwa Odoi. I'd like to find out, when it comes to farmer-based organizations and cooperatives who play a critical role in the agricultural value chain, whose responsibility is it to invest in them? I say this because most of them are registered as NGOs, FBOs, cooperatives, and sometimes they do need a lot of technical assistance. So how can they become investor ready so that when companies want to engage with them to either contract them as contract farmers and stuff, they will be investor ready? Otherwise, then you end up playing the role of Catherine, who tried to invest in them over a long period and then gets a fingers bent. Whose role is it to support
Who's your question directed at?
Everyone. Thank you.
All right, thank you. Lawyer Kwame Jantua, please hold on for me. Even though we decided for 2 questions, several people want to ask questions. We're going to have another section, panel section. Please write your questions down. When we get there, then you throw your questions at our panel, please. In the meantime, we're just through with the 2 questions. We're going to wrap up, and then we'll move on to the next section. Thank you. Lawyer Kwame Jantua, please take over.
Let me tell you what I did. I'm the chairman of the oil and gas sector, AGI. And AGI found that I could mentor. So I mentor a lot of small-scale businesses, community small-scale businesses. And I realized that some of that they were doing were fantastic. They were packaging Tom Brown, they were packaging Kose, they were packaging all these types of foods in very nice packaging, powdered form. So I contacted my contacts in Europe and said, look, I've got these products. What do you think? Send it to us. I packed a whole box, send it to them. And now what I do is that I help them export their products into the European market. And we share profits. They know nothing about the European market, but they have a good product. Some of them are beginning to increase their products. We can all do that if we want to help. We can all do that if it is not us we're thinking of, but we're thinking of the community. And I think through that, we would be able to get into AFCTFA with some of the SMEs. For me, that is key. My panel, thank you very much.
Thank you very much, Lawyer Kwame Jantoa. Ladies and gentlemen, he's going to come back. He's going to get ready for the next section. He's still the moderator and the long-standing one, of course. Lawyer. All right, so quickly, ladies and gentlemen, we're going to move on to another segment of our day here. And this has to do with alternative sources of funding for industry. And we're going to go straight into navigating the Ghana alternative market to support industrial advancement. And to help us with this conversation, I'd like to call on the head of the Listing and New Products Department, Joyce A.C. Boache. Please, a round of applause for her.
Thank you very much. Good afternoon, everybody. It's such an interesting discussion. Funding is a necessity, and it's a critical one indeed. And it is an issue for our entrepreneurs. And therefore, we need to find all the means possible to be able to for expansion. But just as the other panelists said, I mean, funding it doesn't come cheap and has all the things that you need to do right to be able to get that fund. And one thing I liked the lady, I think Madame Edu Krobo said is, let your story be true. It's important because it is a story you are going to tell and tell and tell. So if you don't tell it truth, you find yourself in another bracket. Thank you very much. So we are going to see how possible we can navigate a brief of the exchange. So as an exchange, our vision is to be a world-recognized securities market relevant to the Ghanaian economy, because if we are not relevant, why are we there as an exchange? So it should be a platform that is so relevant to the economy. And how do we do that? Being relevant means that we are going to provide that platform where entrepreneurs can use to raise the necessary capital they need, and also give those that want to invest to make returns the opportunity to use the market to do so. Now, when it comes to our value proposition, what do we stand for? What can we offer our entrepreneurs? Investing or listing or putting your company on the Ghana Stock Exchange, or let me say here, the Ghana Alternative Market, is seen as a prestigious, thing to do. When an entrepreneur, you set up your company, the vision we are looking at is to have that aim of taking your market to the next level, where your company is going to outlive you. You shouldn't, let's say, pass and your company also will not be in existence. Many a time that is what we have seen in this country. It shouldn't be so. So listing on this market gives your company that prestige, being in that society. And it gives also your company the visibility. Either you are doing some capital.